Hey guys, welcome back to the channel. It's me, Adam. You're watching Steady Invest. In this video, I'm going to be talking about a new EV SPAC that's easily going to 10x your money. I'm just kidding. We're talking about Ford Motors, ticker symbol F, and it trades on the New York Stock Exchange. It's currently valued at a market cap of $45 billion. So in a way, it's valued like other SPACs, but not really the same thing. And you might be thinking, Adam, why Ford stock? You could double or triple your money in any speculation play right now and call it a day. Look at the volume on Ford stock. It looks really interesting. What's important to note is that Ford is already an established company, not like these speculation plays. For example, to compare, let's look at GM stock. Look at the jump in price and volume. I've been trading in the stock market for less than a year, and the one thing I can say for certain is anything can happen. So I'm going to share my thoughts, other news, and price targets. Before I do, if you haven't already, smash that like button. It helps my videos get out there. As well, if you're new to the channel, welcome aboard. Hit that subscribe button. And if you're in Canada and want to start trading with Wealthsimple or Questrade, use my links below and we'll both get free money. Now, on to the video. Alright, we're going to look at the chart first and what a chart this is. So we could have gotten this back in the 1980s for under $1, and then it saw its peak in the tech bubble, surprisingly, at $91. And ever since that peak, Ford stock lost 87% of value. After the crash, it bottomed in 2002, and then it traded sideways from $10 to $2, $15, $15 again. And then during the pandemic crash, it went all the way down to $4. And since then, it's been steadily climbing back up. And right now, we're trading above where it was when the pandemic had started, back to levels it was trading back in 2018. They suspended their dividend last year when the market was crashing due to uncertainty to the pandemic, saying they would prioritize financial flexibility and continue to invest in new products and its growth initiatives. The company also announced that it would draw $15.4 billion from two credit lines to shore up its balance sheet. The most recent dividend was in the first quarter of 2020. It was paid out at the beginning of March at 15 cents a share. They set this dividend back in 2016, and if we were getting 15 cents a share at this current price right now, we would be getting 5.31% on our dividend yield. I'm pretty confident it's going to come back. It's just a matter of when at this point. Granted, they did suspend their dividend in 2006 and restored it back in 2012, so after 6 years. And as I mentioned before, it's currently valued at $44 billion. And just for comparison, we can also look at General Motors. They've been public for just over 10 years. They're currently valued at $75 billion. At these prices, the dividend yield would be just under 3%. Again, their dividend's also suspended. And just like Ford, they've been trading sideways for the last decade as well. And same thing, during the pandemic, it reached a new low, and now it's at all-time highs. One thing to take into account, and this is not the only reason why you should be getting into a stock because other people are saying to buy it, but Jim Cramer, who has a lot of influence over the financial markets, he's extremely bullish on Ford, calling it his favorite stock for 2021. Just a few weeks ago, there's room for both Ford and Tesla. A few months ago, you have to buy Ford stock. And at that time the video came out, it was under $10. So that's something to take note of as well. And what makes a boring stock like Ford exciting to me is that it's currently a value stock. And EV, again, is going to be a huge theme throughout the next few decades. Their market cap is less than 5% of Tesla. And this might seem like I'm going a little bit off topic, but each of these candlesticks over here represent 15 minutes of Tesla the weekend before they entered the S&P 500. You see at 3 o'clock, the price was $670. And by the time it was 3:45, the price was $636. And in the last 15 minutes of trading, the stock price went up from $636 all the way to $680. I can't remember what the market cap was at the time, but the amount of money that took for that move to happen was an amount worth multi-billions of dollars. So the point I'm trying to make here is that there's a lot of money in this world, more than we can fathom. And I'm pretty sure the amount of money that went into Tesla stock in that last 15 minutes of trading is more than the entire market capitalization of Ford. Tying it all together, I see a value stock in a trending sector. Now maybe I'm putting together a puzzle and the pieces don't fit, but maybe they do. The current Ford PE is 10.75, which is nice and low. And looking at their balance sheet at the end of 2019, they had total assets worth $258 billion and total liabilities of $225 billion. Looking at their investor presentation, they have over $11.5 billion in global investments in electrification through 2022, now oriented to battery electric vehicles, spanning 4 plants to support their highest volume products. They have nearly 45% market share of US commercial vehicles. Electric vehicles, that pie is getting bigger and bigger as the years go on. When you already have the brand and have captured 45% market share of US commercial vehicles for the last 40 plus years, Not every single person is going to be flocking to the Teslas and the Neos of the world when they go and buy an electric vehicle. Not every single person is going to be driving one of these new speculation luxury cars. It's an absolutely huge market, a lot of competitors, and it would be very ignorant to think one or two names are going to capture the entire market. Another reason Ford shares have seen an uptick recently as well, they got added to a Dutch bank's short-term catalyst call buy list, which is a group of stocks that could move higher following a catalyst event. Because of Ford's earnings report next month, and specifically its 2021 guidance, they see strong volume growth for U.S. auto sales in 2021 as the country recovers from the pandemic, and he believes that Ford's robust new product cycle has put it in a position to outperform. That, plus a lower warranty and recall costs and savings from ongoing restructuring program, could lead Ford to issue stronger than expected guidance for 2021, which in turn could prompt investors to anticipate a more aggressive turnaround trajectory. And if we look at the volume over the last couple of weeks, it's very comparable to the volume during the peak of the crash last year. As far as price targets, as long as we can stay above this line over here of about $10, then that's a positive sign if it can consolidate. But if it did break that support line of $10, then you could average down every 50 cents or every dollar. But it's unlikely that we see the $6, $7, $8 range again, unless there's overall market weakness. This isn't the most volatile stock, but you see this push up over the last couple of weeks, maybe there's momentum. And that's why I like Ford's prospects long term and think it could be a very interesting investment. Electric vehicle stocks are going to be a prominent investment vehicle over the upcoming decades. And during the early days of this revolution and transition, it may pay off to have a reputable name trading at a reasonable valuation down the line. But of course, with every investment, you have to do your full due diligence and research. And that's the end of my video. Thank you very much for watching. If you haven't already, smash that like button. It helps my videos get out there. As well, if you're new to the channel, welcome aboard. Hit that subscribe button. And if you're investing or trading Ford stock, let me know in the comments below. I'll see you guys in the next video.